Hey, good evening, everyone. Thanks so much for giving me your time today. And I'm Mark from Right Line Trading. Wally will be presenting after me, and let's get started. Just first, unfortunately, this disclaimer. That all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within futures or forex markets, nor for any profits or losses incurred. Right Line Trading is not a registered financial advisor. We are not licensed commodity trading advisors. Obviously, there's substantial risk of losing money, and we recommend that you consider talking to your broker or certified financial trading advisor before taking a trade. Now, with that said, just a little bit about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson College in Philadelphia, and I published close to 15 peer-reviewed articles in first-tier journals. And I've been involved in the financial markets for over 20 years. Now, Right Line Trading is the product of over a decade of analysis of price action, market structure, and indicator algorithms. The software is based on mathematical modeling of closed systems using multivariable equations, and it's one of the fastest growing trading systems on NinjaTrader. In my graduate school work, that was my area of expertise, and that was optimizing any closed system. Back then, I did the work for the U.S. Navy, and what I optimized was underwater decompression schedules. Deep dives for the U.S. Navy is really dangerous. Back then, the only way they could optimize the dives was by trial and error. And oftentimes, if a diver went down 1,000 feet, really deep, and when he came up, they have to periodically stop and wait. They have to switch oxygen mixtures in order to let the decreasing pressure in their blood allow the gas that's in their blood, nitrogen, oxygen, and some other trace substances to equilibrate with the outside ambient pressure. And through the use of mathematical modeling, I was able to optimize a lot of their underwater decompression schedules and make them a lot safer. Now, what I've done now is each market acts exactly like a closed system. And what we've done is apply these same techniques to trading software to determine what forces are responsible for the future movement of price, put them in a multivariable equation, optimize it, and be able to come up with software that predicts how price is going to move out into the future. And what I'm going to show you today is our Uni-Renko trading system. And it's really, I think it's going to be unlike anything that you've seen in the past. It gives you precision, exact, software-generated entries that work and were used by many, many funded top-step traders. Now, as I mentioned, the system was created via the use of mathematical modeling techniques, and these are computer-driven algorithms. And this is a science that's utilized to create software that's generated to predict how price is going to move out into the future in any financial market or in any time frame. Now, the system can be used to trade Forex, futures, and stocks. And the indicators all have forward-looking ability. They don't lag price, they lead price. So what we want to know, we don't care where price has been. the only thing that matters to us when we day trade or swing trade is being able to predict with a high degree of accuracy how price is going to move out into the future. That really is the key. Now, first we have to determine what's the best way to describe price in terms of in terms of candles. There's a lot of ways to do it. You can do it with a tick chart. You can do it with a time chart. You can do it with a tick chart. You can do it with a range. You can do it with Renko, or you can do it with Uni-Renko. Now, for a long time, what I did was I let price movement be described by range bars. Now, what I like about range bars is that the only independent variable associated with them is how far the market moves. So if you set a candle for 10 range, every time it moves 10 ticks or 10 pips or 10 cents, you get a new candle. It doesn't rely on any time factor or any tick factor. There's only one variable that determines when you're going to get a new candle, and that is how far the market moves. Now, I really feel that it describes price really well, and traded using range bars for many years until I bumped into Uni-Renko bars. Now, here's price, and here's the same price on a Uni-Renko chart. You can see that it smooths out price, sort of filters out the chop, and is able to get you into a trade, keep you into a trade. So it really gives you optimal trading entries. Now, Uni-Renko is a lot different than Renko. Uni-Renko allows for the creation of a wick, so it does provide you with some ability to read Japanese candlestick formations. And we're going to talk about that in 1 second. Now, in order to trade Uni-Renko bars, you have to give up something. And one of the things that it does is, to some extent, it does obliterate price action. Like, you can't evaluate Japanese candlestick patterns. You can't see if the candle's engulfing, if you have a dark cloud cover, if you have a piercing candle. I mean, those formations are you just can't see. It's a lot more difficult to see whether you have a rising or falling triangle, a bull flag or bear flag pattern. These are also tougher. So in order to trade Uni-Renko, you really need a powerful set of leading indicators to signal an entry. Now, anytime somebody presents Uni-Renko or Renko bars, they usually show you a period of time where price is trending, and it looks great in a trending market. But what we have to do is be able to sidestep any potential entry in a chop market where we're likely to lose the trade, and that's why we need really powerful leading indicators. Now, the strength is that they do filter out noise, and that's a very powerful positive. So along with these leading indicators that signal an entry, they really do create superior trading entries. And each Uni-Renko bar has to be optimized for each individual market. The inputs have to be optimized based on the volatility of the instrument. If it's really volatile, you have to go with a longer or bigger Uni-Renko. If it's something like bonds or treasury notes, or a small cap stock that has less volatility than a stock like, say maybe Amazon or Google. Also, you have to use inputs that create smaller Uni-Renko candles. Now, I'm just going to skip this. Now, here's sort of the core of our system. And this is called the 3-line V2 indicator. Now, line 1 does a multi-time frame assessment of momentum. Line 2 does a multi-time frame assessment of stochastic. And line 3 does a multi-time frame assessment of order flow. Now, momentum and stochastic have been around a long time. And, we might consider those to be lagging indicators or forces that don't really predict how price is going to move out into the future. What I want to review with you briefly is how we do the calculation. And that's really the difference as to how we've turned these forces into leading indicators. Now, first, let's take a look at order flow. Now, I think order flow is a really seriously misunderstood parameter. A lot of software and a lot of traders use it wrong, and it gets them into bad trades. Now, and here's the problem with order flow. Up here is the market delta of the candle. Excuse me. And it's a little blurred, but the number's 29.85 and it's green. Now, what the market delta tells you is that on your trading dome, there's an overabundance of buyers as opposed to sellers. It doesn't tell you executed trades. It simply looks at market depth and tells you that there's a considerably greater number of buyers than there are sellers. Therefore, one would make the supposition that there's more buying pressure on the market than there is selling pressure. And this candle does, in fact, close to the upside. And you can see that you can also create a delta of each individual tick value, or pip value, or cent value. And this is simply the cumulative number based on each of these individual numbers. Now, the problem is this. You can have a positive delta on a down candle, and that's what causes the problems. And this is what a lot of software does not take into account. Now, there should be, based on the delta, more buying pressure than there is selling pressure. But remember, we're looking at market depth. We're not looking at executed orders. So though there's an overabundance of buyers, the sellers are more aggressive. They're the ones executing the trades. So they create a down candle, even though the delta is positive. That's the problem. So how do we utilize market delta, order flow tracking? All of the things that are given different names, but are essentially the same thing. Looking at the disparity between the bid-ask number, and using that to determine candle direction. And what we do is this. Now here's a whole series of candles, and you can see the market delta for each. Now, the majority of deltas that are positive create up candles, and the majority of deltas that are negative create down candles, except you do have these outliers. This is a big negative 22.39, and it's an up candle. So what we need to do is we need to eliminate the outliers. In essence, what we want to use is one standard deviation's worth of data and eliminate all the outliers. That data that falls outside of that one range of that one standard deviation range. Now, here's how we do it. Now, remember, we only look at the delta of the candles of the two higher multiple Uni-Renko charts. We don't do any assessment of the deltas looking at our trading chart. If we do that, what we do is we don't create an independent force. We create a dependent force. We want the calculation to be totally separate from any information that comes from our trading chart. So if we're trading a 2 Uni-Renko, we're going to be looking at the 4 Uni-Renko and the 6 Uni-Renko. And we don't look at the chart, our trading chart at all. And what we do is we place all of these delta values into a 15-period simple moving average. And that simple moving average over that 15-period look back smooths the data. And it creates 2 moving averages, one for each higher Uni-Renko time frame. And when both 15-period SMAs are sloping up, then the bulls are firmly in control of the market. And when both 15-period SMAs are sloping down, the bears are firmly in control of the market. And the order flow line is going to be red. And when the 15-period SMAs are not in agreement, you're going to get a yellow line. Now, here's how it looks, and I'm going to show you the live charts in a minute. Order flow leads price. And if you're getting stopped out, if you're getting caught in the wrong direction, if you're getting in the market reverses on you, there's a high likelihood that you're trading in the wrong direction and you're not taking into account order flow, which is a significantly positive leading force that determines the direction of price. And you can see as price is falling, order flow will turn green first. And then price will make a U-turn and head right back up. Now we're not looking at all right now about entries. Entries we're going to talk about in a little bit. The only thing we're talking about now is the absolute direction that you must trade in order to take a real low risk, high reward trade. And it can't be done without looking at order flow. Now, if you want to take a counter trend trade or try to call a top, now I don't recommend you do it at all personally. I just like to trend trade. But if you do, you cannot do it until order flow turns, until there's selling pressure in the market, and then price has a high likelihood of falling. Now, here's another example. Price heads down, order flow turns green first. Now, if you're in a short trade and this turns green, you're going to abandon the trade. And you're going to look for that first up pivot, and your absolute direction you must trade is long. And you see all these traders taking these 2 counter trend candles, 2 counter trend candles against order flow. They're just going to get stopped out. And in fact, what they're going to do is they're going to propel price up, because not only is the market telling you that there's significant buying pressure and that probably the institutions are adding more long contracts or buying more shares of stock or throwing in contracts on the Forex. What happens to these traders are they're going to get stopped out. And as they get stopped out, they have to buy their contracts back, and they're going to push the market up even stronger. So on this counter trend roll, moving back in occurs even with more specificity and a greater likelihood that price is going to continue up. Here's just another example. Green, we must trade long. Yellow, we just stand aside. We leave the market alone. And then on red, we have to go short. And then on green, we must go long. Now, what's really important is to determine when not to trade. And that really is key. And when this color changes back and forth, that's a little more difficult to determine when chop is present when you have one line. But when this color keeps changing back and forth, price is going to chop. And as we start adding lines, it's going to get easier and easier to determine that we're in a chop market. We're going to stand aside. And then when order flow turns, we've got an absolute market direction to trade. Now let's look at momentum. Now momentum can be assessed in a lot of different ways. You can look at stochastic. We used to use Heikin-Ashi momentum, but now we look at MACD momentum. And MACD momentum, it's very easy to calculate. We just look at the MACD line. If it's accelerating away from the signal line, momentum is positive. If it's accelerating towards the signal line, momentum is negative. There's also one other major event, and that is where the MACD line crosses the signal line. All of that data is assessed by the MACD line of our three-line indicator. Again, the assessment is only made on the 2 or higher Uni-Renko multiple charts. Doesn't matter what the Uni-Renko size is. It could be a 6 Uni-Renko. You're going to look at the 12 and the 18, the longer term time frames. Now, when both this should not be momentum, it should be MACD. When both MACD lines are accelerating away from the signal line, the momentum assessment's green. And when both MACD lines are accelerating towards the signal line, the MACD line or momentum line is red. And when the MACD lines are not in agreement on the 2 higher time frames, it's yellow. So now let's put them together. We want order flow and momentum to align in order for us to take a trade. Now here's the market, and you can see it's rising. And once order flow and momentum together turn red, the market's going to roll to the downside. And once they go green, the market is going to roll to the upside. Now with greater specificity, they're giving you an absolute direction to trade. Now you're trading in the direction of order flow and momentum. It makes it even more important you trade in the appropriate direction only. Now it's easier to see chop because you need green, green, or red, red. And here the alignment just hardly ever occurs. Again, we're not looking at an entry. We're just looking at an absolute direction to trade. And you can see when market is red, red, you're going to get the roll to the downside. When it's green, green, you're going to get the roll to the upside, to the downside on red, red, to the upside on green, green. And what's nice about it is all traders are always trying to call tops and trying to call bottoms. They'll call a top on stochastic divergence or MACD divergence. Well, the fact is the only time you're going to get a top is when the institutional traders pull away from the market, and all of this buying pressure that's present throughout this move up stops. If you get any divergent signal, or for instance, you hit an area of resistance to the upside, it's going to snap through. It's going to snap through a pivot. It's going to snap through a fib line. It doesn't make any difference. As long as there's this dual buying pressure on the market, as defined by the 2 higher term time frames, the market is going to continue to rise. And it can keep you in a trade for a significant period of time because here the institutional traders are creating significant buying pressure for a long period of time. Here's chop, easier and easier to tell. And then when you get the alignment, you're only going to trade short. Now, what happens here? And I'll go over all these questions. That's a great question, John. What's a closed system? And I'm going to go over all those questions in a second. Now, when price goes up, it's going to roll to the downside. Now, you have traders trying to make a counter trend long move here, but you're not going to be in this long move because as long as these lines are red, red, this long move is doomed. Just a question of how long these traders are going to be able to hang in to create this long price move before the prevailing forces take over and stop them all out. So when you take this roll back to the downside again, it occurs with significantly more power. Again, with two forces. One, the institutional traders are creating the selling pressure. Then what they're doing is they're selling contracts, selling lots, or selling shares of stock. And these long traders are going to start feeling a lot of pain. And as they do, they're going to start selling their contracts. And it's going to push this market down harder and faster. So we like these small counter trend moves. These are the kind of moves we stay away from. And we leverage them by waiting for the market to move in the direction we know it's going to move and just wait for these traders to get run over. It just creates a better opportunity to trade and the more likelihood that this is going to push down hard. Now here's stochastic. Now, stochastic also has been around forever, but we look at the two higher Uni-Renko time frames. Remember, we're trading data that's assessed off our two higher time frame charts. Now, one of the first books I read when I started to look at day trading, and I think this man is retired because I used to correspond with him via email. He sent me a signed copy of his book. His name is Alexander Elder, and he wrote a book called Trading for a Living. And as far as I know, he was the first person to describe the triple screen method of trading. And what he said in his book was that if you want to day trade or swing trade, you have to look at three time frames: your trading chart and then your two higher time frames. You're going to define what they are, but you have to trade with three screens up for every instrument that you're trading. And his book sold a ton of copies. And I think it's I think it's one of the most important books ever written for teaching traders how to trade appropriately. You can still get it on Amazon. It costs you like $5. It's a great book called Trading for a Living by Alexander Elder. Now, for stochastic, when the stochastic line is above 80, we know that, remember, stochastic is a bounded indicator. So when it goes above 80 and stays above 80, we know that the bulls have tremendous power because they're keeping that bounded indicator above the 80 line. Now, so it does not matter the position of the stochastic line with respect to the signal line. All that matters is the stochastic line's above 80, so our stochastic assessment is going to be green. When both stochastic lines are pushed below 20 by sellers and is kept below 20, again, we don't care what the position is of the stochastic line versus the signal line. All that matters is the stochastic line is below 20 and stays there. So our stochastic assessment is red. Now, when the stochastic lines are between 20 and 80, then we look at whether or not the stochastic line is above the signal line, in which case the stochastic assessment is green. And if the stochastic lines are below the signal line, then the stochastic assessment is red. And if there's no alignment, it's yellow. And this system looks at stochastic divergence. And I'm going to show you that on a live chart. And what we almost always do is we ignore it. Like we want to take note of it. And if it's present potentially on an entry, we may not enter the trade. But if we're in a trade and we see divergence, we are staying with the trade. So now we have three lines. First line's momentum, second line is stochastic, and third line is order flow. And it gets more difficult to track these three lines. So we make it a lot easier. And here's what we do. We project the assessment of momentum, stochastic, and order flow directly onto the candles. And that makes your assessment really easy. We don't even have to look at the three line anymore unless for some reason you want to. Because here's what you're going to get. Now you can change the color of the candle halo, and you can change the thickness of the candle halo. But when the candle halo is surrounded in blue, and I surround it in sky blue, then I know that the three line is going to be green, green, green. And when the candle halo is in gold, I know that the three line is red, red, red. And I look for this color on my entry candle. And we're going to talk about the entry candles in a minute. All that we're going to look at now is the candle color halo. So here's an example. Price is rising. And as it rises, all of a sudden, the candle halo goes gold. So on an up candle, the three line assessment has now gone red, red, red. We know that order flow, stochastic, and momentum and our higher time frames has rolled. So the next down candle we get is an entry. And we're going to take that trade short. Now, there are a couple of other parameters that we look at. Remember, we trade trend trade. We're trend traders. So we're not going to take this counter trend move, even though the three line is in our direction. We're going to look for the next down candle on an up, the next down signal on an up candle and wait for that next roll to the downside. Here, you can't even think about taking the up candle because the candle halo is yellow, telling you the three line is still aligned to the downside. And this is going to go nowhere. You're going to take the first down candle to take the roll to the short side. So you see you're getting an absolute direction to trade. And these traders are trading stochastic divergence, MACD divergence. They're trading off of possibly a fib line. Fibs do not predict how price is going to move out into the future. I hate to speak against some of these dogmatic things that people hold to, but fibs have been around for 20 years and nobody's ever made money trading them. And they were created by a mathematician 400 years ago. And although they do describe certain symmetries in nature, they're not going to describe price movement in the stock market. Now, we want the workspace to be as clean as possible, so no data should be projected that distracts our eyes. Now, since all of the data from the three line indicator is already being projected onto the candles, we don't need to look at it. Now, you can leave it up and you can watch it if you like, and some traders elect to do that. But what I do is I make mine transparent and it disappears from the chart. So now, the only thing I have to pay attention to, and where we should focus all our attention, is on price. And on the pivot, if I get that blue candle halo, I'm going to go long. If on this pivot, I get that blue candle halo, I'm going to go long. And if on this roll, and it's preceded by this down three line signal, I'm going to take the short roll. Now, there's no preceding up three line, but the three line occurs on the pivot. I'm going to take it long. So here's an entry short. Just looking at the three line. Here's your entry long. And normally we're not going to take this entry. And I'm going to show you a couple other things why. Because the trend is short. And I'll show you how we define the trend. We can't take the short trade because the candle halo is black. So we have no three-line alignment. And even though it works, it's a risky entry. We can't take this trade long because even though that it moves long, the entry is also a high-risk entry. And what we want to do when we day trade, and trust me, I've been day trading for 15 years, is avoid risk at all costs. You want to take the lowest risk, potentially highest reward trades you possibly can. And they're both of these short trades, this trade and this trade. This is where the likelihood of not only getting a winner, but getting a runner is the highest. And if you have an automated trade management strategy set, say you're on the NASDAQ and your first target's 20 ticks, your second target is 30 ticks, and your third target is 40 ticks. You not only want to take a trade that's going to be a winner, you want to take a trade that has a chance to grab that 40 tick move so that you tilt the risk to reward in your favor. Because if you're taking 25 ticks of risk per candle, you want to try to get the trade to go all the way through your third target. Now, Uni-Renko candles move differently than standard candles. If you look at a tick, or let's look, a range or a tick candle or a time candle, and I don't want to overcomplicate it, but they move arithmetically, i.e. they move like 1 plus 2 plus 3 plus 4. They move in a straight line. But Uni-Renko moves exponentially because when you're in a trend, Uni-Renko bars move exceedingly fast. So they move like x squared plus x squared plus x squared. So what we do is we take a normal oscillator formula and we take it to the second power and we create an exponential oscillator assessment so that it will track price appropriately and give us the entries that we want. Now, an oscillator signal is not absolutely required at entry, but an oscillator signal markedly decreases risk on an entry. Now, here's the whole system. And I'm going to show you more carefully when the oscillator signal is generated. Well, you see that up triangle? That's a long oscillator signal. And you've got the candle halo, and you're going to go long. Now, I've removed these. These are overbought signals, and we just ignore them. The down blue candles and the up red candles, or red triangles, we don't take. We don't even use. Another long signal. Another long signal. Excuse me 1 second. Add another long signal. Now, here's the counter trend signals. We never take them. We only take the signals that the oscillator gives us in the direction of the trend. And the trend is defined partially by this 50. We go long above it and short below it. So when price is above it, we're only going to look for the long oscillator calls. Now, here's all the short trades. Off the 50 short, off the 50 short, off the 50 short, short, and short. And we never take the counter trend long trades because they're risky trades. We don't want to take any risky trades. We want to stay in as low risk in entry as possible. Now, here's how the oscillator signals are generated. When the oscillator line crosses the 50 line to the upside, you get an up triangle. And it's really remarkable how the exponential almost will always come right at a price turn. Not always, but very commonly they do. So right here is an up signal, just as the oscillator crosses the 50 line to the upside. To the downside, it comes one candle off, and that's still a valid entry call short. These are all oversold. They're no longer present on the chart. Now here's a long signal in the middle of the move. So it's just not a tradable signal. And here's a perfect short right here and down. So what I'm going to do is I'm going to answer some questions. And while I do that, I'm going to boot my NinjaTrader because I still have about 15 minutes left. And I want to show you trades off of an actual chart. So give me 1 second, and then I'm going to answer questions because it's going to take maybe about 4 minutes or so for my NinjaTrader to boot. Normally I have it booted, but for some reason Rory didn't do it. And so let me just make sure it's connecting, and then I'm going to start answering questions because anyone can show you anything off of JPEGs. What I want to do is I want to show you the signals off of a live chart. Just hang on 1 second. I'm just waiting for it. Okay, there's the connection. It's connecting up nice. And let me now I'll reshoot the chart, the workspace in a minute. And let me just go to some questions. Hang on here. Okay. No problem. No problem. Okay, a closed system, John. Every financial market behaves like a closed system. In thermodynamics, a closed system is defined by any system in which a unique set of forces bring pressure to bear, and those forces can be easily defined. And in real time, practically speaking, you can almost define, if you have any kids, your kid's room is a closed system. If you don't, if the room is left on its own, what happens to your kid's room? It gets messier and messier and messier, just because of the law of thermodynamics. And then what is required to bring order from disorder, or order from chaos? It's the application of energy. Now, if each individual financial market is looked upon as a closed system, it inherently wants to move and chop, because every closed system by its very nature wants to chop. So every individual market, if left to its own devices, will move in a chaotic fashion. What brings the market to move in a trend? It's the application of big money, institutional money. And what forces are brought to bear on this closed system in order to determine how it's going to behave out into the future? And three of those key forces are momentum, stochastic, and order flow. And what's the reason? The reason is because they act as proxies for us to determine what the big institutional traders are doing with their money. If there's no application of big money to the market, then order flow, stochastic, and momentum are just going to be all chaotic. The higher time frames won't align. Those three lines, you'll get one yellow, one green, one red. And as soon as you see them align, you know early on that the institutional traders have moved in. Whoops. And what they're going to do is they're going to create a trend. And we are going to know the direction of that trend by looking at the indicator. So that's what a closed system is. So it's very, very important to note that. And that's why so much software doesn't work, because it doesn't have any forward-looking ability. So let me just take these out real quickly. And let me just bring up a chart. Hang on one sec. I'm going to go over some of these markets, and then I'll finish answering the questions. Can't find my, here it is. Hang on one sec here. Now remember, if you use the same type of system that everybody else uses and traders have been using for the past 20 years, you're likely not going to do very well. Because 95% of day traders have been losing money for 20 years straight. And the reason they do is because they do the same thing that everybody else has been doing. I mean, they use the same software and the same trading techniques, and nobody learns from the previous set of traders who have all gone bankrupt. So you have to think a little bit out of the box and think about a trading methodology that's slightly different. What I'm going to do is I'm going to put in the template right here. Now, as a part of this webinar, and this is the only time we do it, what I'm going to do is we're going to add an indicator. And the indicator is called bias. And I think it's one of the most powerful indicators that there is. You know, every independent force that moves the market doesn't move it with equal power. This one is incredibly powerful. And I'll show you what it is. It's this background color. What does this background color look at? It looks at the multi-time frame assessment, in this particular case, of crude oil. Now, when there's a multi-time frame alignment of crude to the downside, the only way we can trade is short. All the way through here. And when there's a multi-time frame alignment to the upside, which we'll find somewhere here, green, the only direction we can trade is long. And when the space is clear, I never take a trade ever. If the higher time frames are not aligned in direction, we're not talking about order flow, stochastic, or momentum. We're simply talking about the trend of the two higher time frames. If they're not both trending up or both trending down, the direction that your price is going to take on our trading chart is really, really unclear. Now, I may have to change the input here, and I do. So I only trade when background bias is present. Now, with that said, let's take a look at the entries that are generated. And you're going to see you're rarely going to get a loss. We can move back to the beginning of the day on crude. And I want to show you a few entries. Now, here's one. Now, I just want to tell you quickly about the 50 and the 15. This is a 50 period moving average. This is a 15 period moving average, but you'll never find them anyplace, anywhere. Because what this is a really unique indicator. Remember that price moves exponentially. So this is a 50 EMA of a 50 EMA. And it moves real smoothly, much smoother than a plain 50 EMA, but almost as fast. And this Remember, an optimized system has to have these kind of derivations based upon on how price moves when you trade Uni-Renko. It's a 15 EMA of a 15 EMA, and it tracks price great, and it's really terrific to help us trade. Now, in order to take a trade, we have to be below the 50 and the 15 for a short, and above the 50 and the 15 for a long. And we optimally need an oscillator signal, and we need this yellow halo. Now we have it right here. Here's the oscillator entry. But one of our trading rules is that if the next candle gives you the entry, because the 3-line aligns here, you can take it. If it comes on the 3rd candle or the 4th candle, you cannot trade it. But the next candle over, and you've got your entry, and there's your short. Now, there's no oscillator signal here, but you can take your continuation trade short right here. Now, look at this short signal here. The 3-line is blue. So you're not going to take a short trade. And right here, you've saved yourself a loser. Now, here you have no trade. Here's the oscillator signal. The next candle is black. Still no 3-line alignment. You can't take the entry on the 3rd candle. It's just not going to happen. Now here, this is a little bit risky. You have no oscillator, and you're a little bit oversold. You can take this, and you're going to get a first target. And here's your next perfect trade, right here, all the way down. Now, you cannot take a short trade on this blue background bias. Only longs, and there just aren't any. Let's keep going, because I can look at it. I only have 3 minutes. I don't want to take too much time. There's your short, and your perfect, and your winner, right there. No question about it. You've got down bias. I don't have time to go over the power of each individual down color, but you have to trade short here, and you've got your entry. Once you lose background bias, I don't trade. I mean, there's a lot of entries here. Oops, and you know what it is? There's the recalibration. Sometimes you have to hit F5, because this is a fractal indicator. So right here is your entry, right here. And you get this whole move to the downside. You have no move down here. And the other thing that we do not do ever is trade into a pivot. And I can't go into how our pivot indicator is stronger and one of the few real good pivots, because I only have 2 minutes. But we never, ever trade short into a pivot. And it avoids tons of losers. Now we lose all background bias here. Now here, this candle is not below the 15. So you can't take this trade. Here we have no background color. So this is a huge winner, but we can't take it. Whoops, I have to refresh the screen. We can take this trade. Well, except we can't, because we have this pivot right here. Now here, there's room to the pivot. So we've got a short, which is tough, but we've got a short. And you see how accurate the entries are. And the key is you never get caught in the wrong direction. Now on this move down, you've got this short trade, continuation, this short trade, this continuation. This is a tougher one because you're trading into support. So it's a tough trade here, but you're letting these traders take all the risk, trading in the counter trend direction. I'll just show one other area. Let me just show one other market really quick, and I'll show you the NASDAQ. And the NASDAQ is a beast to trade. And I'm not going to show you stocks. I don't have time to show you Forex, but I'll show you the NQ. Now, whatever system you're trading, this is going to increase your win percentage drastically. We have to change the Uni-Renko setting to 10, 4, 20. So it's a faster, more volatile market, and you can see how choppy it is. Let's move to the morning real quickly, because I want to go through questions, and I'm right at 7. I don't want to take up any of Wally's time. I'm just going to ask him for 5 minutes, and then I'll switch the presentation over. I traded the NASDAQ this morning, and it was really hard to trade. Let me just move this over here. I'll show you. This was a great trade. Now, it's a pullback right to the 15 and the continuation right here. You have no trade here. You're into these pivots. No trade here. You don't have a 3 line, and you're trading into support. And you have to give up that winner. That's okay. Here's your next trade. See that wick right through the 50 and the 15? There's your winner. Now, I traded this, no background bias. Huge mistake. I took a loser. Here's the wick right back to the 15, long. This is what we look for. And what all you're seeing here is a pullback, a pull up, price coming down, and then the continuation. That's what we're doing. Here it is again, only the 3 line. You don't have the 3 line here. This is risky because you want the 15 to cross the 50. We do have trading rules. Here's your perfect entry right here. Boing, and down. And look at this candle. You want to take that short? Nope. 3 line prohibits it. So you see how background bias gives you an absolute direction to trade. There's your long trade and up. You're going to have to give up some winners, but when you take a trade, the likelihood of success is extremely high. There's your entry in the direction of the multi-time frame trend, in the direction of order flow, stochastic, and momentum. So I hope that that's really clear. Let me show you that the offer that we have, and then I'll take 60 seconds to answer any questions that you have. Now, the background bias, we normally do not offer. Now, the whole system with a lifetime license is normally $14.99, and we're offering it for $5.99. It's active on any market and on any time frame. You can use it to trade futures, Forex, or stocks. You always get updates and add-ons for life. When we make it better, you get the upgrade and the add-on. And when the process of creating a new indicator, you're going to get it. You get 1 month in the trading room with me. So you're going to take all my trades. And your learning curve is going to be very, very, very quick. You get a 10-module educational training. And you get our video tutorial library, which is 450 videos. And the first 10 orders get that background bias. And the offer expires on the 26th, which is Friday evening. And we'll send you an email, but it's www.rightlinestrading.com/special offer. I'm going to put it into the room here. It's in the room. Now, let me just quickly. I'll go over the questions. Okay, I got that one. Chop is ended, Peter, when order flow, stochastic, and momentum all align. When they're different colors, that's when you're in chop. If you look here, it's really easy to see. And you can just look at the candle bodies themselves. Hang on a second, I'll show you. See this black? See this black? See this black? There's no alignment. See this black, 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 no alignment. That's helping you define chop. That's what will save you on taking an enormous number of losers. When you take an entry on a black halo, the likelihood of it losing is exceedingly high. Every now and then I'll make a try at it. It almost always blows up on me. When you get a 3 line with a yellow halo around it, I wouldn't recommend that It's not a bad idea, but I wouldn't recommend front running the market like that. I would wait for the turn. How would you know the trend is not changing when the candles were green and the halo was blue? Eric, I understand what you're saying. You're saying if this is blue, how do you know this one's going to be blue? And this one's going to be blue? And this one's going to be blue? Well, the simple answer is you're trading in the direction of the multi-time frame trend. And really what the whole system is telling you is when the likelihood of follow through is at its greatest prevalence. Because that's the only thing that you ever care about is on a short trade, if this is aligned to the downside here, what's the likelihood that the next candle will, and the next candle will, and the next candle will, and the next candle will? And you know what it is? It's this background. Because when the multi-time frame trend is to the downside, you usually get follow through to the downside. That's what makes this add-on indicator so potent. As soon as you get this blue, the likelihood of that halo continuing is extremely high. And that's a really good question, because that's the problem the traders have, is follow through on the move. And that's what that helps assure you it's not going to happen. And I'm going to have to go very, very quickly here. The stops and targets that we have are all we give them to you all for each market. They're based on our mathematical modeling. First target, second target. We do the complete installation for you. Rory and Sergio do all the customer service, all of the tech support. We do everything from A to Z for you. Right, that long wick represents a pullback and then rejection. That's exactly right, you got it. Hey, listen, Fabio, that's a great question. The answer is trading is still difficult. You have to have patience and you have to have discipline. But if you do it, you'll see in our live trading room, we make money almost every day. You know, Eric, I got it. I swear, if you can call me or on the phones, but I got to go. I've taken up way too much of Wally's time. And I got to switch over to him. So we hope to see you in the room. We make money in the trading room. I trade the right edge with chart trader up, all stops and targets projected. I make the calls way in advance. And our goal in that live trading room is to make money. It is not an educational room, although you'll learn. The goal is to make money in the room. Okay? No, I understand, Eric. All right, listen, thank you so much for your time. I really appreciate it. And Wally, thank you so much for your indulgence. Let me switch over now to Wally. So take care, everybody. And Wally has a great system. Hang in there, and we're going to switch over to Wally. Hold on a minute here. Okay, I got it. Okay. Okay, Wally, you're up. Okay.
Hello, everybody. If you guys can hear me, could you please give me a Y? You know if you guys can hear me. Sorry about that. Just type in a Y. See if you guys can hear me. Aaron, thank you so much, man. Send me a text if you can hear me. Again, hey, Rory or Mark, can you guys hear me? Just want to make sure that people can hear me on the call. Hey guys, can you guys hear me? Good evening, everybody. I wonder if you guys can hear me. If you guys can hear me, hopefully you guys can. I'm not sure. I'm just going to assume that you can hear me. Hopefully you can. All right. I see people can hear me. Great. Thank you so much. Sorry about that, guys. And again, I do apologize for Earth. When I was logging on, we had a power on my computer. It was saying that I had to reboot the whole system. It was just a whole mess. So thanks again, Mark, for being. Okay, so I guess today is just one of those technically challenging days today. I just realized again that you guys couldn't hear me, so I apologize about that. But anyways, let me just jump into it, and I apologize for all the technical difficulties that we had today. Um, so how do I want to start? So let me go to my presentation. I'm going to be going back and forth between my presentation and live charts and stuff like that, so that you guys can see what we do. But for those of you guys who haven't heard about me before, don't know who I am, my name is Wally Olopaid. I am with Right Side Trading, not to be confused with Right Line Trading. We are really good friends from Right Line Trading. Sometimes you might even get emails from me, assuming that thinking that it's actually from Rory, and sometimes I might get emails from Rory thinking that it's actually from my company, but uh, only because the only thing that differentiates the two of us is we're right side, there's right line. But anyways, my name is Wally Olopaid. I'm the #1 IPO trader in the world. I'm proud to hold that title. And also I'm a chart expert for those of you guys who do not know me. Those who know me know that everything I do is strictly 100% based on looking at charts. I do not look at news, fundamental analysis, or anything whatsoever except for what the chart is saying. And so I have trained myself to learn how to read charts, and that is what I am going to be showing you guys today. One of the biggest things about our company, and the reason why we call our company Right Side Trading, is because when I first started learning how to trade, one of my biggest frustration in trading was everybody telling me or showing me stocks in hindsight. And what I mean by that is we'll see a chart like this and they'll say, oh, look, see, you could have got into this stock down here and look at how much money you would have made if this stock went up. Or, this was a good time to buy this market right here. Look at how high this stock went up. Or they'll come back here and say, this is a good time to buy. Look at how much you would have made. And then they'll come back and say, oh, yeah, if you started selling up here, this is where you should have sold. And then, you would have been able to avoid all this stuff that's taking place. Now, all that sounds fine and dandy in hindsight, okay? And anybody can do that in hindsight. Literally, anybody can do that in hindsight. The question and the key is, how do we anticipate what happens on the right side of this chart? Because if we look at this chart right now, This little green candle right here is the very last and most current candle that we are dealing with as we speak. So the question becomes, how do we anticipate what's going to take place going forward, which is the right side of the chart? So hopefully you guys get the correlation between the name of our company and why we named it such as such. And again, it's because we wanted to focus on how to anticipate moves going forward. Now, every so often I get people say, well, then are you predicting the future? We don't predict the future. We just read what the chart is communicating. The, yeah, probably so. Were we able to see the future? No, we were not able to see the future. However, because of what we are reading, we can anticipate what is going to take place. And that is simply what right side trading is all about, is anticipating what's going to happen going forward, predicting the future. Don't predict the future. Okay. All right. So that being said, that's basically what our company is about. What I want to talk to you guys very briefly today is regarding three things. How to consistently get into stocks at the bottom. Okay. And I'll explain a little bit more. Then we'll talk about, not only getting into stocks at the bottom, but identifying the ones that are going to be able to give you some big moves before they happen. Keyword is before they happen. Because again, we're trying to anticipate things before they happen, not after they happen. After they happen, it's in hindsight. And then last but not least is avoid chasing extended stocks. And there's a reason why I'm saying that, because the market that we're in right now, there's a lot of fear that is going on. And I want to touch on that just a little bit as well. So my rule number one, when it comes to trading, I have basically two rules. And I have for different strategies and stuff like that. But for overall, rule number one, avoid chasing extended stocks. And what I mean by that is, if we look at a chart like this, if you've heard this before, say, comments like this, if you invested $1,000 in Bitcoin back in 2013, here's how much you would have right now. Or you'll hear people say, oh yeah, if you invested in Apple when it first went public, you'll be a multimillionaire today. Okay, well, why are they saying that? What's the premise of those comments? Premises of those comments is like, these stocks have already made extended moves, just like Bitcoin had made extended moves. Now, if you look again, when this article come out, you can see right here, this article came out in December of 2017. So in December of 2017, this is where Bitcoin was. This, ladies and gentlemen, is what I consider to be an extended stock. It's already gone up so much, and then now they want to come out with an article like this. Okay, my thing would have been, and again, this has nothing to do with the person who wrote the article, but Marshall's like, where were you in 2013, and why didn't you write this type of article in 2013? Okay, why is it that it's not until 2017, 4 years later, you come out and you say, oh, if you had only bought it in 2013, you would have been X amount of dollars now. And it's because people are looking at the result. They're not looking for the setup. They are paying attention to the results. Hence the word extended stock. So I see this a lot of times where people are looking at stocks after they've already gone up. Oh, did you hear about this? I get text messages, I get emails, I get phone calls. Oh my God, did you see what happened to this stock today? Almost always, 100% of the time, if they tell me that, it's because the stock has already gone up already. Okay, and my thing is, it's already too late. Were you already in before it happened? It even got to a point where it became a pet peeve of mine. I said, don't tell me about a stock unless you're already in. I respect a lot more. I respect people a whole lot more, or traders a whole lot more, if they can come to me and say, hey, Wally, you want to pay attention to this stock. Watch what's going to happen. You need to start watching this. The setup is building up, okay? And then you get into it. A lot of the marijuana stocks that a lot of people are talking about right now, is it because they saw the setup ahead of time, or is it because they seen the results of what's happened? A lot of people chasing marijuana stocks now simply because of what they've seen happen. in that. And so that basically is them chasing extended stock. So in order to be successful in trading, one of my number one rule is avoid chasing extended stock. If the stock is already gone, don't chase it. If you have that in mind, it's like from here on out, the only thing I'm going to do is find stocks that have the setup rather than the ones that are already extended. You do far well. It's one of the hardest things for a lot of traders because the ones that make it on the news are the ones that are already extended. Okay. When Bitcoin made it on the news, it was after all this was happening. But in 2013, when it was building up, nobody, not even myself, was talking about Bitcoin. Okay. And so by the time I saw this, it was like, hey, it's already too far gone. If I didn't get in at the bottom, I'm not interested in getting it. That's my number one rule. If I cannot get in the bottom, I am not interested in that stock. Okay, so that's the first thing. This is usually what happens to people who chase extended stocks, and this is one of the reasons why I say, you don't want to do it. We've now coined that you get in Bitcoin, and so if you ever hear me say you got Bitcoin, that's because you chased an extended stock. Okay, you got Bitcoin. Anybody can go look at the chart of Bitcoin right now. I feel bad for the people who actually bought Bitcoin when it was up here. Okay, because now, you know, and then they come up with all kinds of reasons why they should hold on. Now let's go to something that's more current. We just had this market right now, live market today. Okay, let's go to a live market today. This is what is the chart of the S&P 500 looks like right now. So let me go to the S&P 500 today. Here's the SPX. All right, now actually this is from yesterday. This is the chart from yesterday. What I did was I hid today's candle. And the reason why I hit today's candle is because, again, yesterday and actually late last week, early this week, yesterday and today, I was getting emails from a lot of people, again, saying, hey, don't you think it's time to short the market now? Don't you think it's time to short the market? Now, what do you think I'm going to be telling people? So look, it's already extended to the downside. So just as it is to the upside, it's the same thing to the downside. This is already extended. And I was on a few webinars yesterday, and one of those webinars that I was on, there was a particular person on there, and it's like, oh, it just makes sense to start shorting the market right now. And I was like, it's too late. If you did not short the market when it was up here, this is your opportunity to short the market up here. If you did not short the market up here, now all you're doing is just chasing the extended stocks. That's all you're doing. The only reason why people are looking to short it now is because of all that has been going on. And by then, again, it's too late. If you were not able to train yourself to see the setup that told you that this market is ready to go down somewhere up here, it's too late to do that. And so for those people who are students of mine who were some of these webinars that I was on yesterday, give me 1 second. Let me take a sip of water real quick. Excuse me. For people who were on it, you would notice one of the things that I was saying is, look, let's not do anything. Let's wait. The only thing we can do now is wait for, and people asking me this all day long. Oh, are you going to be short in the market? I said, it's too late for me to try to short this market. It's too late. If I did not get it up here, it's too late. The only thing I'm looking for now is the reversal. Is anticipating what's going to take place, and when it's time, when the market is ready to start heading back higher. That's all I care about. Okay, so one of the things I was telling people, I said, look, at the end of the day, there are certain places where a stock or the market itself will give you clues as to where it's going to reverse. Okay, I call those reversal locations. It's nothing new, not something I came up with. It's a very common thing. But one of those places is, look, once a stock goes down to a certain level, I said, look, for me, I want to see what would happen when price gets down to this level. That's one of the things I said. I wanted to see what price would do when it gets down to that level. Until then, I am not looking to short this market. So if it keeps on going further down, fine. However, one of the biggest things, I know that this area is somewhat of a given the questions. I'm hoping maybe Rory or Mark might be on there. If they have any questions, you guys can ask. If not, just send me an email to info@rightsidetrading and I'll do my best to answer those questions later on. So I apologize again if there is no way I can answer your questions. What was I saying? Okay, what I was saying is, what I wanted to see is, let's see what happens when price comes back down to this level. Because again, if we did not get into this market somewhere up there to short it, then trying to short it right here is like the biggest mistakes most people make, which is chasing extended stock. So rule number one again is, from here on out, make it in your mind that if I did not get in at the bottom, I am not going to chase that stock. I don't care how much everybody else is making in the market. I don't care how much everybody's talking about that stock. If we didn't get in at the bottom, we just don't trade it. It's the same thing I did with Bitcoin. Okay. Even right now, the question is, should you be shorting Bitcoin, or should you be looking for when Bitcoin hits the bottom? The answer is, you should be looking for when Bitcoin hits the bottom. Okay. So that then brings us to the next thing, which is, how do you know when the stock has hit bottom? But we're ahead of ourselves. Let's go back to our presentation. So one of the quotes I like to say is, people get excited about stocks that have huge profits, okay, or huge drops. But the true credit, in my opinion, goes to those who have trained their eyes to see the setup. From here on out, it's about seeing the setup, not the results. Make it a point that you will not trade results. You only want to trade setup. Get excited about setups. Don't get excited about the results. Get excited about the setups, because nobody's usually talking about these stocks when they're setting up. And even the media doesn't really talk about the stocks when they're setting up. Most of the time, they talk about it after the results has happened. There are so many different media outlets out there that will publish stocks moving for the day and all that kind of stuff. It's not because they saw the setup, okay? And then they feed this in like all kinds of subscription. It's not because they saw the setup. It's because they are simply running a scan for which stocks already moved, and then they try to feed people with that information. But by then, it's usually too late. Rule number two, very simple. I try to keep it very simple. Just like Warren Buffett used to say, rule number one, don't lose money. Rule number two, don't forget rule number one. Well, in my case, rule number two is only get into stocks that are at the bottom. Pure simple. Only get into stocks that are at the bottom. If you train yourself and you actually you change your whole philosophy of trading and say, look, I will be patient enough and only get into stocks that are at the bottom, you will do so much better. So from here on out, it's time for you to transform your trading. You have to learn how to identify stocks that are ready to go up before it happens, ahead of time, okay? Ahead of time. I want to show you this clip right here. This is a clip about a story that we've all heard many, many times. A story between a rabbit or a hare and a tortoise. And I've heard this over and over and over about how the tortoise beats the rabbit, tortoise beats the rabbit. It doesn't make any sense. But have you ever watched a live race between a tortoise and a rabbit? You can go on YouTube and you can, search for that. Let me just play that for you very quickly, and you will see what typically happens when. Okay, this is just an ad. I'm going to skip that ad in a few seconds. But you will see, and I did it. You don't need to hear, the noise that's being made in the background. But just watch the video, and I want you guys to pay attention to what's happening. This is a race between a tortoise and a rabbit. Now, a rabbit obviously is definitely. Look at how much it's already blown past the turtle. But watch what the rabbit is doing. I mean, literally, what is the rabbit doing right now? It's not that it's not faster than the tortoise, but what is that rabbit doing? It's distracted. It isn't focused, okay? And this is what happens to so many traders. They make one step forward, they get distracted. They get one step forward, they get excited, they get distracted. They are not focused. And this happens over and over and over and over again. Many, many races between a rabbit and a tortoise ends up being where the tortoise wins because the tortoise is focused and the rabbit is not. So how do we apply this into trading? Well, again, I've seen many, many traders where it's like chasing after all kinds of strategies here and there, or, oh my goodness, I heard this person made, especially like nowadays on YouTube or on Facebook, you hear about this young 21-year-old who turned $500 into $100,000 in 2 months. And people get excited, come to my trade. Focus, focus, focus. Don't get distracted. Look, at the end of the day, rule number one, don't chase stocks that are extended. Rule number two, train your eyes to see stocks that are at the bottom. And in my case, I always like to tell people, slow and focused wins the race. Slow and focused win the race. What do I mean by that? Slow and focused wins the race. Look, if we train ourselves to only look for stocks that are at the bottom, we would do so much better. We will be able to accomplish our goals. Now, it might not happen in the 2 months like most of these guys on YouTube and Facebook talks about, where they say, "Oh, I took $500 and turned into 100,000," or "I took $500 and turned into $1,000,000 in 6 months." It might not happen that way. But if you do this slow and focus over time, you will build your trading portfolio better than most people that are out there. It is not uncommon to hear this very, very often where, okay, yes, they made a huge amount of money today, but by the end of the year, they're still nowhere. At the end of 2 years, they're still nowhere. By the end of 3 years, they're no better off than where they started off from. I believe it's because people are not focused. And again, once you take out this whole concept of, look, I am not going to be chasing extended stocks. From here on out, I'm only going to focus on stocks that are at the bottom. Then you'll be able to see great improvements. So I'm going to show you a few stocks, and I'm going to show you a few things on how to see that. One thing I'm not going to do today, just make it very clear, is I'm going to show you setups. I'm going to show you how to identify setups. But there are things that I will not talk about, such as where do you place your stops, how to manage the trade, when to get out of the trade, okay? I'm going to leave all that out because, again, I want you guys to be just focused on one thing right now, is training your eyes to do what? To see the setup. That's it. Training your eyes to see the setup. Not about getting out of a trade, when to take profits, how much money should I put into it. That is a concern for people. People want to know how to do all that. Yes, but there's a time and place for that. Right now, today on this webinar, that is not what we're going to be talking about. Today is, look, how do I avoid chasing extended stocks and only focus on finding stocks that are at the bottom? That's it. Okay. If you learn how to master that, learn how to figure that out, then everything else can, be added on later. Okay. It's like taking baby steps, All right. So one of the things you can do is, just like people try to chase stocks when it's going up, one of the best ways that you can find stocks that are at the bottom is look for stocks that have already calmed down, just like we see right now. This is literally going on live in the market. Now, I have a formula that I usually tell people. The formula to success to me is what I call the P.I.C system, P.I.C, okay? And actually, I call it the P.I. square. And so in order to be in the right stock, okay, RS stands for the right stock, or in order to be on the right side of any trade that you're in, you need to understand what I call the pick formula, okay? So another way I play around with those words is, in order to pick the right stock, you need this formula, okay? In order to pick, get that, the right stock, you need this formula. And the two here, up here, which is the squared, is simply just using the same formula when you decide to get into a trade, and also using the same formula when it's time to get out of the trade. Now, what does this acronym P.I.C stand for? Some of you guys already know what that is. The P in this acronym stands for patterns, okay? Learning how to identify patterns. That's the first thing. The second thing is I, and that is just simply indicators, learning how to use certain indicators. And what I have found is people use indicators incorrectly. And then the third one is candlesticks, learning how to read candlesticks, okay? Learning how to read candlesticks. Now, today, my focus would be to talk about, a little bit about all of those to a certain extent, okay? But more importantly is understanding candlesticks. Now, let me talk about candlesticks for a second. Look, at the end of the day, there are hundreds, and I mean hundreds of candlestick signals. Okay, hundreds of candlestick signals, but there are a few candlestick signals that, if you understand those candlestick signals, that's all you really need. Okay, one of them is the bullish engulfing. Most people know what a bullish engulfing is. Look, again, you can go on YouTube, find out information about bullish engulfing, no problem. There's candlesticks like the Morning Star. You can go on the YouTube and find those kind of things. Okay, but there are just a handful of candlestick signals that you just need to understand. And if you pick those candlesticks and just say, look, these are the candlesticks that I'm going to focus on, again, you will not be able to take a lot of trades. You might miss out on some trades. But again, remember the phrase that I said, slow and focused wins the race. Slow and focused wins the race. So that means that you might not get into a lot of trades. I saw one guy telling me that, he put on 63 trades in a day because he's a scalper. Look, I have nothing against scalper. Maybe that's the way they like to trade and all that kind of stuff. That's fine. But again, my method and what I'm trying to teach people and showing people and how to be consistent, look, very simple rules. Don't go after stocks that are extended. Find the ones that are at the bottom and just pick a few candlestick signals where you will enter the trade only when you see those candlestick signals. It's as simple as that. Now, in my candlestick signals, I usually have about 5 rules that I follow. One of those that I want to point out is the fact that when you have a candlestick signal and something like this right here, this is literally what happened right there. This is, for those who might know, a morning star signal. One of the things that I always say is, look, when you have a candlestick signal, before you actually place the trade, make sure you have follow through. Make sure that you have follow through. Now, before we even start looking for candlestick signals, we want to see stocks that have had an extended run to the downside. Again, if you just focus on stocks that have had extended runs to the downside and then now are beginning to show these reversal candlestick signals, then you want to pay attention to stocks like that. That's how you find them. All right. Then the next step is to make sure that, look, before I enter the trade, I want to make sure that I have some kind of follow through. Okay. That's one of the things that you want to see. Now, there's another thing that you want to make sure is after it comes down, you look at patterns, where's support, all that kind of stuff. Very basic stuff. I mean, these are all basic stuff that you can use to help you with trading. No problem with that. But you see, here's the reason why I did not want to short this market when everybody was saying short the market, short the market. Well, I already knew we had an extended run to the downside. And price came to this bottom right here. The thing was, hey, you know what? It's supposed to be heading higher. We had this green candle that looked like a morning star. Did not get confirmation. What is confirmation? Confirmation is a green candle that closes above the candlestick signal itself. That's what confirmation is. In this case, we got a red candle, so I knew that we did not get confirmation. So that brought the stock further down. But the thing was, now we're going back to the P, which is a pattern. The pattern is, wait a second, we got support down here. And we are so close to support. This is the reason why I said anybody trying to short right now is making a huge mistake. Because why? We got support right here. We got to deal with this support first before we can do anything else. And if anything, because of how extended this is to the downside, my thing is, hey, wait a second. If it comes back down here, let's start looking for a reversal signal. So here's what happened to this stock today. I mean, or actually the market, most of you guys already saw that. You know, the market dropped big this morning. And I mean, everybody, I mean, I started getting all kinds of text messages, emails as well. Oh my gosh, oh my God. But I said, look, don't do anything until we see what price does around here. Now we have a green candle. But the problem today is we still don't have a reversal candlestick signal. But the good news is, hey, that pattern of support is a pattern, has shown us that, hey, wait a second, this is still holding. This support is holding. Sellers try to sell, but then the buyers came. Something that now we want to pay very close attention, because if we get some type of reversal candlestick signal right around here, do not be surprised if this market starts taking off. Okay, and all those people that are trying to go short would probably start regretting it simply because they are trying to short after an extended drop in price. You guys get that? An extended drop in price. This is not the time to start selling. This is the time to start buying, to start looking for setups. Now, the good news is, look, we don't even know what's going to happen tomorrow. Truth be told, I have no idea what's going to happen tomorrow. But what I can tell you, just like I said, even though we cannot predict tomorrow's morning, but what I can tell you is, wait a second, the market is having a very strong support level right here. What does that mean? If the market has a very strong support level, then the one thing it tells me is that get ready for a potential reversal to the upside. That's it. And I like to tell people, I say, look, we don't guess, we don't hope or wish. One of the things we always do is we see, we know, and we expect. What do we see? I see a pattern here where we have a strong support. How do I know it's a strong support? Well, as bad as the market was this morning, by the end of the day, they brought it right back up above that support level. I was literally telling people on one of these webinars that I was on yesterday, it's like, do not short this market. Let's watch and see what happens right here. There was one person that was actually even arguing with me. No, it doesn't make sense. Now it's time to short. I said, it's too late to try to short this. You're too close to this support level right now. Okay, it's ludicrous to try to start shorting when you're so close to this level right here. Now, keep in mind, again, I'm not a scalper, okay, and I'm not a day trader. So depending on whether you're a scalper or day trader, you might look at this like, oh shoot, this money I could make right here. I understand that, but I'm more of a swing trader, so I'm really talking to people who are swing traders and especially long-term traders. Okay. Now, there's another thing that I have, which is added indicators. Now, I've created my own indicator to help me identify when a stock is at the bottom. What I want to show you here is this indicator that I created. And let's see, it's a 1-year chart. All right, so let me zoom out. Look at this, guys. Notice what happens here. This is just 1 year, and I can even go back further than this. Matter of fact, let me do that right now. Let's go back. Now we'll go back 5 years. It doesn't really matter, okay? But I'm gonna come here. So I just want to go what has happened this year long, and this concept of slow and focus. My thing again is after an extended drop in price, we've looked at the patterns. We looked at, we always watch for candlesticks. But here's one of the indicators that I created. Notice what happens. This right here is what I consider the bottom. Anything below this level, this black line right here, is the bottom. Once this indicator comes all the way down to this bottom right here and starts reversing, you can see right here we have a reversal candlestick signal. What ends up happening to the stock? It rallies. Now, this year alone, if all you did was trade 4 times, that's it, just 4 times this year, well, you would have had that opportunity right there. You would have had this opportunity because it came back down again. And again, this is the reversal candlestick signal. That would have given you this right here. You would have had this right here, which would have given you this morning star signal right here. That would have given you that one right there. And then look at this one right here. This is happening right here. You would have reversal signals right there, would have given you this. And now guess what is happening again right here, okay? Exactly what is happening again right here. This happens over and over and over again. We can go back. If you go back to see what are some of the big drops that we had in the past, if we go back to, let me see here. This is the election that we had, to 2016 election right here. Once that happens, this is that reversal signal right there, okay? If anybody remembers the, what is it called? The Brexit. This was Brexit right here, okay? Again, extended drops. Once we have those extended drops to the downside, the ones that spooks everybody, that scares everybody, that's the ones that we want to get into. This was the one that we had in 2016 that formed the market bottom that we had. Guys, let me take you guys back to October of 2014 when we had a huge drop in price as well. Extended drops to the bottom. And then when we come out of this, this is when it starts giving us this situation. Now, you might look at this and say, hey, wait a second. Well, what about this one right here? I mean, price came up here and then it failed. But remember and recall what I said. We said, look, if we get a reversal signal, we want to see a follow through. This was a morning star. We did not get a follow through. Here's another reversal candlestick signal. We didn't get a follow through. So this is where we start combining the P.I.C together, patterns, indicators, candlesticks, okay? Well, candlesticks was kind of leading us on and saying, nah, it's not time to get into this trade yet, okay? And then what end up happening is we come down here again. Now we have another candlestick reversal signal. We see that the indicator is now telling us to get in, and look at what happened the next day. We had followed through. Ladies and gentlemen, this is exactly what happened again this time around. Remember, you might look at this one and say, hey, wait a second, I thought you said buy when it gets out of this bottom level right here. Well, that is true. But the only exception is that we had a candlestick signal in the form of a morning star. So that was a morning star. But what did we not have? We did not have the green candle follow through. Okay. Once we did not have that green candle follow through, this is what happened. But here's the interesting thing. Look at where we are again now. We're at the bottom. We're at the bottom again. So guess what I'm looking for right now? This is live. This is literally what I'm looking for tomorrow. It could happen as early as tomorrow. It could happen as early as Thursday, this Friday. But the idea here is like, look, I know that we are in a market that is at the bottom for now. Okay, it's at the bottom for now. And what I love about this is like in this year, we've had about maybe 4 times in the past where we've been able to do that. And now we have our 5th one for the year. 5 times this year when this has happened. Every year, it gives us one of these bottoms at least 3 times in a year. And that's just on the major market. Can we go in here and apply this to individual stocks? Absolutely, we can apply the exact same thing to individual stocks. Let me give you an example. Let's say we pick a stock like Apple, okay? And what I'm going to do is I'm just going to focus on the last 12 months. I'm not going to go too far back. Let's just focus on the last 12 months. Look at what is happening to Apple right now, okay? Same thing right here would have given you this rally. This one right here would have given you that rally. This one right here would have given you that rally. This one right here would have given you that rally. Can you guys see this? Would have given you that rally. Even this one right here would have given you that rally. And then guess what? This is what we're doing right now. And notice what's happened with Apple. It's like, hey, you know what? It still hasn't come back down. It's as they had pullbacks along the way, but it's making its way back to the top. Making its way back to the top. So when all this crazy stuff was happening, most people had no idea. See, it was the same thing that I did when Apple, now we can even go to a monthly chart, right? So if I go to a monthly chart, I'll show you something. So here's Apple on a monthly chart. In 2016, I was begging people, get into Apple. Why? Because the monthly chart, look at this, guys. On the monthly chart, it was beginning to show us that, hey, wait a second, this is a very, very rare occasion for Apple, for it to be at the bottom like that, okay? And we had the candlestick reversal signal. We had a confirmation that followed through. I said, guys, get into Apple. Now's the time to get into Apple. You know what people were telling me back then? No, don't get into Apple. Steve Jobs already passed away. We don't know who this Tim Cook guy is. We don't believe that he can do what Steve Jobs did. Look at the last time Steve Jobs left Apple and the company collapsed. iWatches came out at the time and it seemed like it wasn't doing well. So it's a total flop. We can't get into it. And I said, guys, we're at the bottom. If there's any time to be buying a stock, it's now that it's at the bottom. Okay. Then it came out about a month or so later that Berkshire Hathaway purchased a huge bunch of shares in Apple. And I was like, wow, that's amazing, because I don't have the resources that Berkshire Hathaway has. Matter of fact, I don't even know how they do their research. But it was very cool to see that the same information that I'm seeing just simply looking at this chart is exactly what is happening, or at least kind of like similar to what Berkshire Hathaway is doing, which is they were loading up on this type of stocks. And at the end of the day, now people are talking about Apple, but in 2016, people were trying to avoid Apple. They were telling people, don't get into Apple. So again, it's important to understand, look, it's very simple rules. We don't chase extended stocks. We want stocks that have come to the bottom. We want to include indicators and candlesticks and stuff like that that can help us tell us when a stock is ready to go higher. Look at this stock right here. This is MasterCard right now. Again, in the last 12 months, this is opportunities that we have. And now we are dealing with another opportunity. Did we have a pullback? Are you going to have some pullback? It's funny because even if you look at this, price went up, came back down, came back up. Okay, there are going to be some pullbacks. But that's what people don't even understand. It's like, oh, wow, when it's a pullback, is this really a pullback? Is this just a reversal? Look at what's happening right now. It's like this is the time to get into stocks like this because now they are giving us those once in a lifetime opportunity. I shouldn't even say once in a lifetime. It's very rare opportunities to get into the market. Okay. Can we go out there and find more stocks that are just doing the same thing where they're at the bottom? Absolutely. Look at Nike, ladies and gentlemen. This is what I mean by when I say prepare in advance. We can see that Nike has the same pattern of when it's at the bottom, it goes to the top. When it's at the bottom, it goes to the top. Well, look at where Nike is now. Now people are saying, oh, stay away from Nike, don't trade it. Man, that might be fine. But one of the stocks that I'm watching is watching this and saying, look, I can't wait until the day it comes back above that level. Because when that happens, that will tell me something good is about to happen to Nike. All I got to do now then is just go, hey, do I have a reversal candlestick signal? Is this thing ready to bounce off of a support level? It's as simple as that. Here's another stock right here. And these, again, I'm actually showing you this because it hasn't even happened yet. And that's what right side trade is all about. Things that have not happened, okay? NVIDIA, oops, let me try that again. NVIDIA. Here's NVIDIA right here. Again, another stock that some people, oh, should we short this stock now and all that kind of stuff. And I'm looking at this like, look, if you did not short it when it was up here, no need to try to short it. Be watching for this to see when does it come back up. That's all I'm looking for. Because again, in the past, we can see this is what happened when you got into NVIDIA at the bottom, okay? This is what happens when you get into NVIDIA at the bottom. Here's another one, the most recent one. So all I'm doing now is just waiting to see when NVIDIA comes back above this level, okay? It's very simple. To me, hey, here's a stock that is already at the bottom. The only question is, when is the reversal going to take place? And being able to just focus on that alone and not chase everything all around the place, that is huge. Here's Intel, okay? Same thing. Guys, again, it doesn't give you opportunities every single day, every single month, but every single year, you will find opportunities to get into stocks that are ready to go higher, okay? You will have opportunities to get into stocks that are ready to go higher. Here's Caterpillar. When I look at Caterpillar right now, Caterpillar just had earnings, dropped so big, okay? Again, is that going to make me want to start shorting Caterpillar? Now, here's the other mistake that people do is like they try to catch this falling knife, meaning that they come there and they say, okay, the stock has already dropped, let me just buy it. Don't, they have no rhyme or reason as to why they're buying it except for like, hey, the stock has dropped. I've heard people say, if you love it at a price of 160, then you should love it at a price of 118. So start buying. No, there are times when it's, it makes sense to buy. And one of the things is we have to watch what the chart is showing us. Again, even with Caterpillar, if all you did was trade when these things happened right here, 1, 2, even this one right here didn't seem like a lot, but is it still profitable? Yes, it is. You'd have had this, you would have had this, you would have had this move right here, probably even this move right here. Does it stand for a long time or not? That's again outside of today's scope. My goal here today was just to show you, look, there is a way. We have found a way to see stocks that are at the bottom. If I had the ability to read your question, I would say, give me any stocks that you have right now. And you can literally go into that right now and just look, say, hey, should I be buying this stock? Should I not be buying this stock? Should I buy this stock? Should I not be buying this stock? And it's as simple as that. If you just follow those rules, we are not going to chase stocks that are extended. And if anything, we want the ones that extend. It's like something like this. Man, this is huge. Look at that extended drop to the bottom. I can't wait for when this stock is ready to start reversing to the upside. Most people are probably not even paying attention to this stock anymore. They probably lost so much money, gave up on it, said forget it, don't want to deal with it anymore. But my goodness, this will be the time that I want to add this to my watch list and say, hey, slow and focused, slow and steady wins the race. Now, there are other stocks that have done phenomenally well. So like you have, say, a stock like this Johnson & Johnson. You think that I'm looking to get into Johnson & Johnson right now? No. Why? Because we already missed the bottom. I mean, this was it right here. We missed that bottom. Forget about Johnson & Johnson right now. Let's focus on something like Caterpillar that is ready to do something. What about stocks like, say, Disney? Okay, let's go to Disney and see, where is Disney right now? Is Disney at the bottom? Heck no. Excuse my language. I apologize about that. Disney's not at the bottom. Nowhere close to the bottom. It's already gone. And so now when Disney broke out above this all-time highs, I remember it was all over the news that day. Everybody trying to trade Disney at that point in time, but it's already too late. If you didn't catch Disney when it was at that bottom, you missed out on it. Okay. So again, it's really focusing on stocks that are at the bottom. Let's look at Verizon. Where is Verizon? Because it came out on the news today. All right. Look at Verizon. It's too late. This is people trying to chase the results. Trying to chase the results. Look at what happened. About 2, 3, 4, 5, 6 days ago, that was your opportunity to get into Verizon. But were people paying attention to it then? No. Now it's all over the news today. Oh, yeah, Verizon, Verizon, Verizon. Oh, I don't care whether it's earnings or not. The fact of the matter is you missed your opportunity to get into Verizon. Now is not the time to be chasing Verizon. This is an extended stock. I know it hurts. Let it go. Let it go. Rule number 1, avoid chasing extended. I mean, if you just make that a rule for yourself, if this stock has already gone too far, I don't want to chase it. I'm not going to trade it. Let's go find something else. You would do far better than most people would out there. I got 2 minutes left. And so what I'm going to do is, let me go back to my presentation, just do this. I mean, there's so much more I can show you guys. And obviously I couldn't show you guys all this in this tonight's webinar. So I'm going to invite you to my offer, which is, let me see right here, this right here. Okay. This Thursday. Remember what I didn't do? I didn't show you guys how to. I didn't show you how to get the indicator. I didn't show you how to manage the trade. I didn't show you when to get out of the trade. Well, that's what I'm going to be doing on October 25th, which is this Thursday coming up. You can come into this webinar for $99 if you choose to. If you're already one of my coaching students, there's already been a part of my lifetime coaching students, then you guys get in, at no additional cost, because that's what you get. But at the end of the day, for those of you guys who want to see how to find stocks at the bottom, guys, this is not rocket science, okay? And the cool thing about it is, like, what are you doing next? What are you doing on an ETF? What are you doing on a stock? It doesn't really matter. The key is, if you remember what I said from the very beginning, how to do it, how to find stocks that are at the bottom. It's very clear. I don't have to guess. This is like, trading is not about guessing. Trading is not about gambling. Trading is not about that stuff. It's not about a feeling. I can't stand when I hear people say, oh, you just have to have that feeling. It's like you just have to be in tune with the market. What the heck does that mean? Again, I'm sorry. Get me all riled up. Shouldn't be using that word. What does that mean, to be in tune with the market? How do I get in tune with the market? Or it has to be something from the gut. It's like, look, unless you can show me how to have that same kind of gut that you have, then, it doesn't really help. But when I show you, so like, hey, it's very logical. You can see something. It's like, wow, wait a second. If it's not below this level, we do nothing. And we only trade the ones that have dipped below the level and now beginning to come back up. Simple as that. Okay, simple as that. If you're able to focus on just that alone, and then just go out there and find stocks that can do the same thing, then your trading will change. Okay, so go to this website, rightside.trading.com/special webinar. We'll be having this webinar at 7 o'clock on Thursday, which is in 2 days. Okay, in 2 days. If you come over there, you'll find it. If you're wondering about our website and information about us, don't worry about this. Just come to this webinar right here, www.rightsidetrading.com/webinar. If you need our email address, it's very simple. It's info@rightsidetrading.com. Not Right Line Trading, but I know the guys from Right Line Trading, if they get your email, they'll send it to me. Likewise, I do the same thing. But it is rightsidetrading.com/special webinar. I look forward to seeing you guys there. And guys, the cool thing too, again, is right now that the market is where it is right now. Okay, let me go back to the market itself. Here's the S&P 500. the question becomes, are we getting ready for a market that is ready to rally? I mean, we can look at this. We can look at the Russell. Here's the Russell. If I can get this to come up. Okay. Here's the Russell right here. And again, this is a market that's at the bottom. So anything thinking about shorting this market is making a huge mistake. The biggest thing we should be waiting for is, when is this market getting ready to go higher? When is this market getting ready to go higher? And it could happen probably in the next 2 days, probably even by Thursday when we have this webinar coming up. Okay. But it'll be cool because on that Thursday, I'll show you exactly, hey, is this market ready to go up or not? We'll see that too as well. So anyways, come join me on Thursday, 7 o'clock p.m. Eastern time. We'll be going over lifestyle. Like if the market is ready to go up, man, you guys will then see how I'm actually picking real life stocks or something. I will go through that with you guys and show you how this formula really works for identifying stocks that are at the bottom, getting ready for some big moves. Now, the cool thing about it is the bigger and longer the extension to the downside, the better it is. The better it is. So seeing something like this and how far it went down, it's like, man, this is beautiful. Why? There's a lot of room to make this up and make all that money back when this reversal takes place. Okay. And if you're thinking, oh, is this the beginning of a bear market? That's a whole different topic. I can show you how to see that too as well. Everything is something that we can always see just by simply looking at a chart. If you notice, not once do we look at the news, not once do we look at any fundamental, it's just simply looking at the chart. Okay. So thank you so much for being on the call, Rory and Mark. I really, really appreciate you guys putting this together and saving me from the technical difficulties that I had earlier today. Thank you so much. I'm not sure if you guys are on the line. If you are, you can take over. If not, I'll wait about 2 to 3 minutes and then I will go ahead and close it down for everybody. But if you're on the line, Rory or Mark, I'm going to go ahead and turn it back over to you. All right, so it seems like Rory and Mark are not on the line, so I'm just going to go ahead and close out. Thank you, everybody, once again. Again, if you need any question or if you have any questions from me, let me go ahead and type in my email, and that is this right here, info@rightsideTrading.com. Info@rightsideTrading.com. That's the email address, info@rightsideTrading.com. Otherwise, I look forward to seeing you guys on Thursday. Good night, everybody. God bless you guys. Bye-bye.